In this video, I'll explain what is a dividend and my 5 recommendations for dividend paying stocks. Stay tuned. What's good, everyone? Welcome back to my channel. If we haven't met before, my name's David. I'm a millennial working professional in the city of brother love, Philadelphia. On this channel, I'll talk about topics such as personal finance, investing, and work-related tips. If that sounds interesting, please subscribe to the channel. Alright, let's talk about dividends. What is a dividend? A dividend is a distribution from a company's earnings to its shareholders. Think of a dividend as an allowance. Remember you were younger when your parents gave you an allowance? That's similar to what dividend is for investors. Why do companies pay dividend? The first reason is to return value to its investors. Generally, companies that pay out dividend are companies that are older and have consistent forms of revenue. Instead of returning value with the appreciation of a stock, they will return value by paying out dividend to its shareholders. The second reason is to show stability. Companies that pay out dividend are very attractive for more cautious or risk-averse investors. A growth company or startup wouldn't be able to offer a dividend because they're focused on growth, and it could be a risky investment for investors. When does a company pay a dividend? It varies for company to company, but some of the popular times are annually, semi-annually, and quarterly. When a company pays you a dividend, you can do a few things. You can spend it, you can save it, or you can reinvest it. My suggestion to you is that you should reinvest it into a DRIP, which stands for a dividend reinvestment plan. A DRIP plan allows you to reinvest the dividends that you receive from the company in order to buy partial shares or shares of the same company. I'm a big fan for DRIPs because investing to the right company can mean that you can make great gains. Let's say you invest $1,000 to invest in a company with an average growth rate of 3%. Over a 25-year period, if the stock pays a 3% dividend and you contribute $100 a year to invest more shares, your $1,000 investment will grow over $8,000 with a 20% tax rate. Now, you can definitely contribute more for this example and have exponentially higher gains, but it's a simple illustration to show that the power of compound interest and to show how DRIP plans work. If you're looking for some recommendations for dividend paying stocks, check these out. My first recommendation is AT&T. AT&T is in the telecommunication industry. Currently, their dividend yield is around 7% with a stock price of $29, and their stock ticker is T. Also, a dividend yield is the relationship between the stock price along with how much a company is offering in its dividend. For a simple example, if you receive $1 for each share of a stock that you own with a stock price of $100, that company's dividend yield is 1%. Now look at AT&T's one-year chart. It seems like it's been trending sideways for the majority of the past year. On top of that, you might have heard that AT&T isn't raising their dividends for the first time in many years. 2020 was a crazy year for a lot of people and companies too. It's in the best interest for AT&T to keep their dividend rates very consistent and not increase it because you want to make sure that these companies are able to innovate and also return value over time, not just this one year. But there were some highlights for the third quarter of 2020. AT&T saw great growth with the platform HBO, which had over 57 million worldwide subscribers, along with adding more than 5 million mobile ads in the third quarter alone. You see, there's a lot of great news out there about AT&T of how they're trying to innovate by gaining more customers and revenue. There are concerns with the less profitable businesses with AT&T, such as DirecTV, but they're definitely doing the right moves of possibly spinning it off or selling their portions to different companies. AT&T is in talks with a private equity firm with possibly selling a portion of their stake in DirecTV, which is a dying business for them. After hearing about all the news about AT&T, I think there's great potential and a great opportunity for investing right now. If telecom isn't your thing, grab a bite with this next recommendation. My second recommendation is McDonald's. They're in the restaurant industry. Their dividend yield is roughly 2.4% with a stock price at $213, and their stock ticker is MCD. Looking at McDonald's one-year chart, it's recovered since the lows of March of 2020, but it's traveled sideways lately. The revenue has been lower year over year due to the restaurants having limited capacity. In my opinion, one of the strengths about McDonald's is that they're always innovating to add new items to the food menu. With all the hype and success with the Popeyes chicken sandwich, McDonald's is going to do their own take on the chicken sandwich too. If you know me, I'm a big fan of fried chicken sandwiches, so I'm really excited to see what McDonald's has in store for us. Besides innovating and experimenting with new food dishes, they're also great in real estate too. There's over 38,000 locations for McDonald's restaurants across the world right now. These are high traffic locations where McDonald's franchisees can get a lot of customers in a short amount of time. And with innovating with new products, I'm sure that there's going to be more people who are coming to McDonald's too. McDonald's can perform in the best of times and in the worst of times. During good times, when people have a lot of money, they're able to spend and buy more food at McDonald's. But also during bad times when unemployment is high or when people lose their jobs, people seek out fast food because it's a more affordable alternative for other food sources out there. I know there's people out there who may not like the food at McDonald's, and it might be a hard pill to swallow, so check out this next recommendation then. My third recommendation is Johnson & Johnson. There are many industries such as pharmaceuticals, medical devices, and consumer goods. Their dividend yield is 2.4% with a stock price of roughly $63. Their stock ticker is J&J. Looking at Johnson & Johnson's one-year chart, they definitely recovered since the March lows of 2020, and they have potential upsides for going higher from here. Johnson & Johnson is overall a good company. With all the products and services, they're able to diversify, which limits the risk, but it also increases the opportunities for them to increase their revenue. One example is, with their expertise and team, the vaccine for the illness is going to be in the works for approval. For 2021, it's going to be a monumentous event when their vaccine gets approved. Their hope is going to kickstart the economy and improve the sentiment for all the people in this nation. And besides working on the vaccine, Johnson & Johnson is looking for a solution to treat the skin of patients who are in chemotherapy to reduce the treatment effect on cancer patient skin. As a whole, I have nothing but good things to say about Johnson & Johnson. It's really heartwarming to hear about a company who's trying to innovate and improve the quality of life for society and people. And by chance, if you want another pharmaceutical stock, check this next stock out. My fourth recommendation is ABBV. ABBV is in the biopharmaceutical industry. They have a dividend yield of 4.6 with a stock price of 110. Their stock ticker is ABBV. Looking at ABBV's one-year chart, it's definitely recovered since their March lows of 2020 and reached an all-time high. ABBV is not a household name such as Johnson & Johnson, but it's only been around since 2013. They're a spin-off company of Abbott Labs pharmaceutical business. Similar to Johnson & Johnson, ABBV is trying to innovate and help society too. They invested roughly $5 billion in 2019 towards research and development to find different ways and methods for therapeutics and other solutions out there. They're in talks to acquire Cypress Medical, which works in a less invasive procedure for neck and face lifts. When investing in a company, you want to make sure that company is not just doing their own work, but also finding other talent out there to acquire that talent. For this stock in particular, I want you to do your own research to see if this company and their goals are aligned with what you want in terms of your investments and for future projection. I'm sure a lot of people who are watching this right now may have never heard of ABBV, but I'm pretty sure that you heard of this next stock. My fifth recommendation is Coca-Cola or Coke. Coke is in the beverage industry. Their dividend yield is 3.3% with a stock price at $48, and their stock ticker is KO. Looking at the one-year chart for Coke, it seems like it's recovered a little bit since March of 2020 of last year, but it's moving sideways since then. It could be due to lower demand because the economy has been operating with limited capacity. After hearing and seeing the charts of Coca-Cola, you're probably disheartened or a little discouraged from investing in them, but I want you to have some confidence with Coca-Cola's management team and their executive board because they know what they're doing. They've been operating for a long period of time, and they have the backing and support from serious investors such as Warren Buffett. As an interesting fact, Coca-Cola is going to be introducing a coffee flavor soda product in the near future. It's really refreshing to see a company such as Coca-Cola with a strong brand and has been around for ages that they're not afraid to enter into a new market such as coffee. I know it's very competitive, such as with other companies such as Starbucks, Dunkin' Donuts, and other brands out there, but so is the whole beverage industry. So I'm really confident that they're able to take away with whatever they learned from this deployment of this new product, and hopefully it makes some success or learnings that they can get from it. Overall, I have confidence with Coca-Cola and the other companies that I recommended earlier. So that's what a dividend is. They're distributions of a company's earnings to its shareholder. Right now, I have a small investment with a few shares of AT&T, but I'm looking to buy more shares of it along with some of the companies that I mentioned before. Earning and receiving dividends is a great form of passive income. At first, with smaller investments, it may not seem like you're earning a lot, but give it time. The key to investing in dividend-paying stocks is that you're consistent and diligent. As I mentioned before, compound interest is going to be more effective the more senior you are in your investment strategy. Be mindful of your investments and keep up to date of how your stocks are doing. These are some of my recommendations, but feel free to do your own research to see if you have similar thoughts and opinions too. And let me know in the comments down below what are your thoughts about my recommendations, and let me know your recommendations if I might have missed any. Thank you for watching my video. If you already haven't done so, feel free to like the video, subscribe to the channel. It really helps me shout the content I create. As always, stay fresh, stay awesome, take care.